What's up guys, it's your Money Cat and I hope you are doing well. In this video, we'll talk about Apple, take a look at its chart and do a technical analysis to see where Apple is headed and where is a potential good buying point. This past week has been a crazy week in the stock market. We have stocks like GameStop, AMC just rocketing to the moon. In the meantime, we have solid stocks like Apple, Microsoft, Facebook, all just headed for a very negative week. So Apple, since the earnings, just before the earnings, it hit high of about 145, and since then it has tumbled down about 10%. And this is not because of the earnings by any sort of measurement. They set a new quarterly record for total revenue. They also set a new quarterly record for revenue for services department. And now they have 600 plus million paid subscriptions. And this is going to grow even bigger as Apple continues its dominance over the industry. So then why did Apple drop 10% after such an amazing quarter? Well, I have two potential reasons. Number one is right before the earnings, we basically jumped up 13.5% leading up to the earnings. So when this happens, sometimes it's a buy the rumor, sell the news situation where all the hype builds up and then when the news hit, then people get out of it. However, I'm not really believing this theory because like I said, the quarterly report, the earnings was just fantastic. It was a record-breaking quarter. So even if there was a lot of hype built in, I think Apple actually met all the expectations of that hype. So that leads me to potential reason number two. You've probably heard about GameStop's, AMC, the Wall Street bets, Redditors versus the hedge funds. It's all over the news. And with that happening, I think those big hedge funds had to actually withdraw some of their money from other stocks, such as Apple. And when the stock price drops, not because of any internal issues or the company itself, and it's because of external factors like just overall market dropping, or for this example, short squeeze and people having to cover, then this is when the stock goes on sale and you can get them for cheap. So let's take a look at Apple and see what we have. We are on 180 days for our time frame chart. We are already zoomed in. What I want you to look at is this bullish trend line right here that we began back in November. And Apple has been following this pretty well. As you can see, we supported the price once here and then another time here. And price never went below this trend line. And because of last week's 10% slide, we are now testing this trend line once again. Under normal circumstances, I'd be talking about how RSI is almost oversold, how MACD is at pretty much all-time low, at least within this period, and it looks like perhaps it could do a MACD crossover. Therefore, this is an interesting place to perhaps enter for a small position. But right now isn't a typical time. I'd say right now it's really hard to predict where the market will go. As you can see, a dichotomy between those Wall Street bet stocks just having massive green days while all the other stocks having a red day or red week actually. So we're going to be a little more nitpicky and a little more cautious this time. So taking a closer look, looking at the RSI, yes, it's close to the oversold region, but it's not there yet. It's at 35.4. So I'd rather wait until this actually goes into the oversold region and then take another look. Kind of same thing with the MACD. Yes, it's at probably one of the lowest point. The only other time was back here in November where we began this 3-month long bullish trend. However, the gap between the white line and the blue line is still quite large, and I don't really see the momentum decreasing yet. So again, let's hold off on this. In the last video, I talked about the SPY and the triple Q, and in both charts, the 180-day simple moving average line was broken to the downside. So, although currently Apple is sitting right at the 180 days moving average, because those large indexes have shown that the moving average was broken, I have a feeling that Apple might also break to the downside of that 180 days moving average. So I think right now the best move for short term is to just kind of watch and figure out if there is any pattern, or at least wait until this whole thing with the GameStop, the AMC, the whole thing resolves, and then kind of do a reset and then figure it out from then on. I almost always take the long position, whether it's short term or long term. So, based on that assumption, we're going to take a look at what kind of support levels we have to see where we can possibly buy into Apple. So, the first support level is where we are at right now, actually, testing this bullish trend line that we've set up since back in November. Then after that, we have another support level very close to current price. I'm actually going to change this a little bit. So I will get rid of this and lower it just a tiny bit, because recently the price actually did break down below it actually a couple times. So I will readjust back to about 126 or so right here. I think that fits it just a tiny bit better. So from this bullish trend line, that is only about 3% below. So we'll mark this diagonal bullish trend line as 1. And then after that, around 126 is another support level. Then after that, I think about 120, we might have another support level. And that was a previous resistance here, which had turned into new support. I view these points more as points of interest rather than buying points, even for short term, because like I said, the market is unpredictable, and right now I think it's just really, really hard to do any sort of short term trading because there hasn't been any precedent of what's going on. Lastly, let's take a look at the 3-year weekly chart. This is a very big perspective, big picture. So within the last 3 years, we've had just a few, I'd say 3 times where Apple stock really fell hard. So the first time was back in 2018, around October or so. And that was about high to low 38% downward movement. And then this past March, we had a 35% downward movement. And then this past September, beginning of September, that was about 25% move to the downside. So if we take average of those 3, we are going to be sitting at a little bit higher than negative 30%. So if we draw that in from all-time high at 145.09, and we go down, let's see, 30% or so, 31%, that gives us right on the edge of $100 mark. However, before the $100 mark, I think there's one more potential support level around $108, and that's where this red line is. That was where we had this low as well as this low here, and that's where, I don't know if you can see it, but there's a little bit of gap. So that's where the $108 mark is, and I think we could see a support line there, especially if this yellow line, the 50-day moving average, continues to go up and meets the price around that level. I think there's a good possibility for overall market crash, if not crash, at least a correction, because of all the hype and craze in the market, especially with all the specs coming out and, a lot of money just going into companies that haven't proven anything. On top of that, at what's going on with GameStop, AMC, BlackBerry, all those short squeeze stocks, it just seems the market is very unstable right now, just heading for a cliff. During these times, you want to be invested in companies that have strong financial picture and have strong fundamental base, just like Apple, because they will be in the best position to survive through any sort of crash and come out ahead of the competition even more. Thank you for watching. Have a great weekend, and this has been your Money Cat.